All right, everyone, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So a lot to unwrap here. So we did get CPI and PPI data, so key inflation numbers coming in this week, and you're going to see the market had a very strong reaction on Wednesday to the CPI number. Both CPI and PPI, Producer Price Index, coming in a little softer than expected. And it appears the market was fairly well hedged anyway for these events. And we got a pretty good bid off of that. You can see here if we look at the futures. There you go, Wednesday morning, big surge here. Now we're kind of just in cool off mode on the markets here for the last couple of days. Now we are very stretched. This morning we did get some news out of Europe. Their credit spreads widening a little bit. There's some talk about political turmoil with Macron. Maybe there's something else going on there they're not really telling us about. I didn't really see anything too alarming from banks in the US today, so I don't think that there was a big issue there, at least at the moment, but something, definitely keep an eye on. You can see the FEZ took a 2.62% dive on the day, and the DAX. Actually, we can pull up the actual European markets here. There's Euronext here, so taking a pretty good hit, down just under 2%. DAX down 1.5%, so pretty good hit there from Europe. That did gap us down a little bit this morning in the S&P, but again, tech continues to be strong and continues to outperform. I'm really targeting this quarterly OPEX here in June for a time where these flows might start to change a little bit. They may intensify up until then, though. So what I mean by that is the Nvidias of the world continuing to get these gamma squeezes. Look at Apple this week. Now, this was a monthly, I talked about this earlier, this is a monthly big fat bull flag on Apple. So it was due for a move here. And, it's been a laggard, so to say, in the Mag 7 for quite some time. It hasn't really moved much in a year, but ridiculous pump earlier this week here after their AI conference. A lot of hedges coming off there too, and market got a really good bid out of Apple as well. But little problems in Europe here. Could that carry over into next week? It's certainly possible. The VIX stayed bid pretty much all day. So you can see here the VIX still finished up 6%. With the SPX flat and the triple Qs here up 0.5%. So all in all, right now, market is really stretched, specifically technology. In fact, we're about 3 standard deviations overbought from the 20 moving average on the triple Q. So this needs to pull back in. If it doesn't, and I don't really say this stuff too often because it's very rare when it happens, but you could get, if we don't consolidate here, this could turn into blow-off mode. And I don't have that penciled in. The only reason I'm even saying it is because we should have pulled back today and we didn't. So, it's one thing to have the big gap up, maybe a secondary kind of follow through. We had a little hanging man candle there yesterday that can signal exhaustion. But then that secondary surge here today, or should say the third surge really today, it's really stretched. So it does need to pull back. It does need to consolidate. That said, the spiders, SPX, they're just going sideways. So this chart here is okay. Like this can just consolidate sideways and then, go higher in due time. But the Qs are in danger of running away here. So that is a little bit of a risk. I'd prefer that to pull back in order to avoid euphoria. But that's kind of the market we're in right now. An interesting little tidbit here too is, speaking of fear and euphoria, CNN fear greed's at 38. And the reason for that is this indicator it's generally based on breadth. It's not based on like price or, standard deviations or anything like that. It's based on breadth. And right now, breadth is not very good. That's not been a secret. And that's been the case for the last 18 months. But it's really poor right now. And, I've talked about this many times. There's, a chance here as we get into that OPEX. It's why I'm targeting this June OPEX so much. Do we get into a period where we can get rotation here? If chips have a blow-off move, can small caps catch up and these other sectors finally start to take the mantle? Are we seeing capitulation? Are we seeing one last hate sell in some of these names before things change. Either way, though, again, markets still managing to close out a strong week here, and if they consolidate, as long as support holds, we can pull back, and then go higher from there. But right now, market very stretched here in the near term. Again, specifically technology via the QQQ there. IWM on the weaker side this week. It did manage to close above the low from Tuesday, but still on the softer side. And the market keeps finding an excuse to sell the IWM. So previously it was rates down, IWM up because it's better for those companies debt-wise. Now it's rates down, and the narrative is the economy is slowing, which is bad for these companies. So right now the market is looking at it like there's zero upside, there's zero bull case for IWM. That to me is intriguing, just that very thought. But right now down 1.59 on Friday, and it did close lower on the week. The Dow here, kind of a sideways week here, and it did have a pretty good rally back on Friday, although it still closed negative. It did get defended at that 385 handle. Again, speaking of stretched, SMH here, really getting overbought, and this is kind of down. I mean, if you look at the heat map today, Broadcom and Nvidia, and then look, AMD, Qualcomm, Texas, ADI, Micron, Lam Research, KLA, 10-core, AMAT, all flat or red. So two companies, Broadcom reporting this week. Allegedly, they were never going to do a split, according to Hawk, their CEO, and they did one. I guess he saw that money train from Nvidia and wanted to get in on that. But Broadcom having a power move. Oh, also Adobe as well, reporting good bid for Adobe there, and Oracle reporting earlier this week at new all-time highs as well. But chips still very extended. Take a look at the stocks here, backing into that trend line too, so that may offer some resistance here. IGV, again, continuing to rebound. I've talked about this. I like this down here, and that has gotten a nice bid. It has some resistance at 84. If we can pull back and then get through that, this can really start to push higher. So I do think cloud is interesting here. I believe I showed you guys that chart a few weeks ago of the fund manager allocation, and cloud is at like a multi-year low, and while chips are at a high. So again, if those jaws snap shut and we finally see rotation, this is an interesting sector to be in. Anyway, Dow transports here, we're down big today, but they came way off the lows and actually held 14.8 by the end of the week. So I don't know, maybe they sucked in some shorts there. Maybe this is some near-term capitulation in some of these sectors, but good slice there. I like how it came back though. So transport's holding on to this old trend line here for now. Also the weekly 200 MA in that vicinity. All right, so rates here. So rates starting to break down here. And again, not a surprise with CPI and PPI doing what they did this week. The 2-year managed to carve out a gain on the yield, but we've been well, first of all, we've lost this weekly breakup bar low. So I know it's a little hard to see there, but it's 4.72 and we closed at 4.707. So we closed below that. That's a bearish sign. And then the 5s, 10s, and 30s all easily broke those levels already. I still think the 10-year could get a bounce here at 4.2 and 30-year maybe at 4.33 area. But not a good sign here for rates. Now here's the interesting thing. Yield curves aren't fixing at all. So they're still coming down. So it's not like an inversion here with rates coming down. It's a steepener with rates coming down. So interesting to see that there. And also interesting to see, I don't know if you guys caught this, but Jerome Powell basically publicly call out the lighthouse. So he, quite literally said in his press conference that payrolls may be overstated. Very interesting to hear that. All right, XHB here. So again, we talked about this last week, how we closed outside of the trend line there, but I said, look on the weekly. I want to see where it closes next week. Look at that, we close right back in. So getting saved right there. Again, even if we just get rid of all these lines, you can see we're just overbought and we're working that condition off. So no real problems here. If we start to lose 100, then it could get down to 95, but it held up nicely this week and got defended. So we'll give it that for now. VNQ, I talked to you guys about this little mini bull pattern, and it did play out on Wednesday. No follow through yet because we went up to the trend line, which I told you would be a resistance. So you theoretically could have played that on both sides. You could have played long and then flipped short up here. Made a quick buck on both sides there. But if this can hold on and just put in higher lows and kind of consolidate in this range, it can break through that. So VNQ is interesting to me here too. But good pop this week. XLF continued to back off. So banks, like I said, they were weak today. On the back of Europe, it's not panic though. Like, look at where XLF finished. It finished near the highs of the day. You do have a head and shoulder here on the daily. It's only targeted down to about 39. But again, kind of like XHB, the weekly is still, it's just still working off an overbought condition. All right, and you look at a KRE here. This is why I'm not too concerned with Europe. I wouldn't be shocked if something happened over the weekend. The way volatility behaved today, but I'm not I'm not expecting it. If you look at KRE here, it's down 59 cents. That's not panic level. That's not inside somebody knows something. Massive put buying. That's nothing. If there was a real problem, we would have closed at like 44 bucks. They would have slammed this thing. And if you think that's way too big of a move, I mean, it did that before we broke down last year. It just had absolute meltdown days, and nobody was paying attention except for me. I called this out well in advance, actually in December of that year. But in any case, this does not look. We didn't even take out the low of the week, so I don't think it's anything we need to be too worried about yet. But it's definitely something going on in Europe. KBE. Again, same kind of setup there. The weekly is still okay. Broker dealers, nothing burger this week, just backing off. Oil, good follow through. So I did pick it up last week near the lows. I sold a little early. I was just looking for a bounce here. I honestly couldn't tell you what oil wants to do here. We have a nice up move, a good rebound. I know it was a very crowded trade. That's why I got in it. Everybody wanted to be short oil. Especially going into CPI. I mean, come on now, it's already down, so you want to stay short into CPI. It's not a good idea. But good pop there, and now it's trying to put in a bull flag, but you got to work through all this too. So this is where we broke down from. So there's a lot of sellers sitting up here. I like how we closed above the breakdown bar right here. I just don't know if we can get through 80. It's been rejected so many times. I just don't have a bias on it. I just can't tell you. If we get through 80, then I think it can, push up 82, maybe 84. But if it rolls back down, it takes this pivot out, it's, probably going to 70. But good recovery though. Very nice recovery. XLE, I'm getting really interested in this. Probably around 87. We'll see how that does. I've been waiting for this pullback for a while. I wasn't sure we were going to get there, but good pullback here, and we just stayed inside this little channel. XOP, same thing, very close to that 140, 141-ish area. So looking for that, and then OIH is essentially into that zone as well, around 290 and change. Uranium still holding up, kind of a nothing burger this week for CCJ. Trend is still strong. We've had 2 pullback weeks, nothing doing there. However, URNM was still on the softer side this week, and we broke back below this trend line and then back tested it yesterday, and now closing back below it. However, we're still holding this big 49.50 area. So daily a little weak, weekly still strong. You get below 49.50, you probably go retest 47 again, but it doesn't get bearish to me until we break below 47.17 on a weekly close. The NJ is underperforming though. It's a lot closer to that green bar low. So there's still room for higher lows, but the juniors are a little bit weaker right now. Right, nat gas all over the map here. So big uptick to start the week, and then it came right back down and basically, closed red for the week, didn't it? Yeah, closed red. This might be it for nat gas here for the next couple of months. So again, I've talked about this extensively. You typically get a peak and then a secondary peak in the early to mid part of June, kind of on schedule for that. And then it typically just backs off until, say, like August. So I'm not interested in nat gas right now, but we'll continue to watch this. I think we could see higher prices later this year, but not doing anything with it now. Dollar index, very strong. So very good bid today. It didn't close back above 105.50, but I mean, weekly charts starting to curl back up here. Nice big power bar, and then tested the low a few times and now getting a good bid. So the dollar trying to curl back up here. And then we've got gold here still backing off. So we had that sell late last week and we just went sideways here. Again, looks like it may be setting up a little bear flag on the daily. There's nothing wrong though. I mean, I know everybody wants it to go up $10, $50 a day every day, but it's not how things work. This pullback is fine. This is a good correction. It's just a tight weekly consolidation pattern. Now it could go down and test 2250. It certainly could, maybe even a little bit lower, but I don't think it's going to take too long. I'd give it maybe a few months, and then I think this starts to push higher towards quarter four, late quarter three, quarter four. But again, same thing with silver. Again, looking at the weekly, just went straight up, still extended from the weekly 20 MA. So just doing some consolidation. This is all healthy stuff here. Platinum continuing to back off. It got really close to the 618 where I'm interested in rebuying some PL, but that backing off as well. And then palladium still soft, looking at double bottom potentially down here. I'd like that to line up with the platinum 618. If they could hit at the same time, that would be a good opportunity, I think. Copper continuing to back off here. Again, really crowded trade for a while. I still like 425 for a big bounce area if we can get down there. All right, and then lastly, Bitcoin pulling back a little bit today. So kind of got a little bit of a break earlier this week, and then it came back in today after a small bounce. Bitcoin will close in about 2 hours as I'm doing this video right now. For bulls, you want to see it above 66.04 on a close at 8 p.m. If it closes below it, it's right on top of it right now. If it closes below it, it's not the end of the world, because the weekly, again, same thing with gold here. This is just healthy digestion. I mean, look at the move it's had, and I think it needs to do more of that. If you look on the monthly, you can see how extended it still is from the 20 MA. So when this catches up to price, that's when I think it's going to have another leg up if it can, if it's still in this range. So maybe a tightening range here over the summer on Bitcoin, but overall healthy price action, just like with gold. So again, markets here, again, continuing to melt up as I've talked about. Said likely by late May we'd see a pivot. We got one right on the last day, and we've had a melt up for sure. But specifically technology, really, and I mean really extended and overbought here. So Q's closing at 479.19, and yeah, that's 20 points extended from our daily 20 MA. So just, if you're long, harvest some gains up here, trail your stop, don't let anything go against you. But yeah, markets are I think there's a lot of liquidity being provided that they're not talking about. Janet, I think, is going to try to ride reverse repo out as long as she can. But again, short term, little extended here, and definitely need to cool off a bit. So anyways, guys, I'm going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on ConvoTrades.com. We'll see you guys all next week.